Uneducated Economist here. One of the things that I found when I went to the Rebel Capitalists is that many people are still trying to figure out, not still, just trying to figure out how things operate, what's going on. And, a lot of times when we look at the economy, we have a tendency to try and build our own economic theory, or when we listen to somebody else, we kind of follow an economic theory. I know a lot of times when I talk with people and I am explaining something that I have seen, I talk about like maybe bond market, or I will talk about the Fed funds rate, talk about maybe the standing repo facility. And then I get a blank stare from somebody and I'm like, oh, there's something you're missing, right? Or they're trying to figure it out, or they're trying to process or fill in the blanks of things. And a lot of times, like, it's to the point where I'm thinking, well, you really need to kind of go back to basics just to make sure that everybody understands exactly what it is that you're talking about. Like, even just explaining what a bond is to try and understand how important the bond market is. And so that's where I thought, like, today I would just kind of explain what a bond is, and then we can kind of talk about how bonds really like impact the rest of the economy, and how it's going to be quite important to understand what it is how a bond works and what it is, right? So, like, what is a bond? A bond is just like a loan, right? It's a loan to anybody who purchases it. I mean, or like if it's a loan to the government, I mean. And so anybody can really purchase these things when you think about like corporate debt or government debt. So really, what is this thing? So you have like a few different types of government debt that you can buy. You got like what they refer to as T-bills, and then you got like T-notes, and then you have the Treasury bonds. And each one of these is like a different maturity and how they operate. And really, when you hear like the treasuries, they're talking about all of them, right? But when you hear like T-notes, what they're really talking about is the in-between maturity. So you got the short term, which would be like the bills. And if I remember right, I think it's up to like 12 months, a year, or something like that for the maturity of those particular bonds. And then anything over 10 years would be considered a bond. In between would be bills. And most of the time, everybody just kind of refers to them as bonds, no matter what they are. But really, there are differences between them all. But how does a bond really work? So let's kind of understand what a bond is. A bond is just a loan, right? So I'm just going to tear off a piece of paper here, right? And we're going to imagine that, we're going to borrow $100, right? So I'm just going to write $100 on this thing. Right? That's the face value of the bond. Right? So sometime in the future, this thing will come due, say 10 years from now, right? And it'll pay $100. The price you pay for it may not be exactly $100, but we're going to say it is $100 today, right? It's the purchase of this bond. But then they also carry an interest rate to it. And so this interest rate is referred to as the coupon rate, right? And they call it a coupon because down at the very bottom of this bond, what they're going to do is they're going to separate it with these little coupons, and they're going to have a maturity date on them, right? So there'd be these little coupons along the bottom of them, and we'll say there's 10 of them. How many do I have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Cool, I wrote 10 of them. Good for me. So each one of these little spots here would be another coupon that you could rip off and go and cash it in. And now those would be set at a particular interest rate. Let's say like 10%, right? So once a year, you'd be able to tear off one of these coupons, go and cash it in for $10. At the end of 10 years, you will have been paid $100, and the bond would come due, and you'd be able to cash it in for face value. So if you purchased it at $100, ran 10 years, cashed in all the coupons, and then went and got the face value for the bond, you would have been paid 100% on the dollar for the bond, right? You would have earned $100 for the coupons and then got the face value back. So how does a bond operate after that? Well, let's say you purchase this bond, right, at $100, and then immediately the next day somebody wanted to buy the bond from you, right? So you bought it at $100, and it has 10% coupons attached to the bottom of it. So to you right now, if you had owned this bond, it's a 10% yield. But you're like, nah, I really like this bond, and I can see that there's no more out for sale. And since you're interested in it, I'll sell it to you, right? Even though all the coupons are there, I'll sell it to you for a premium. I'll sell it to you for like $110. So now the new investor who purchases it for $110, although all the coupons are still going to pay 10%, that doesn't change. At the end of the investment, if he holds on to it for 10 years, he will have essentially have earned $90 by purchasing this bond. So his yield has gone down to 9%. You see, the bond still pays 10%, but because he paid a higher price for it, now his yield, the investor, will have dropped to 9% because he will have earned $90 at the end of owning that bond. And so understanding that is critical to everything out there, because the more the interest rates go up, that means the price of the bond goes down. And now when you're holding bonds as an asset, that becomes an issue on your credit rating. So this is what happened to the Silicon Valley Bank, is that they had a bunch of bonds sitting on their balance sheet, and as the interest rates went up, the price of the bonds went down, the value of it. That offsets their assets and liabilities. Now, their liabilities are all the loans that they put out there, right? The asset are the bonds that they hold, right? So I guess not the loans, but the money they put out there for the loans, right? That's their liability. To us, the asset is the money that we get, right? And the liability is that loan. It's completely reversed for the bank, right? Our loan that we write out, that we owe back, that is the bank's asset. And then their liability is the money that they have given you. So if you start pulling your money out of the bank, right, that's them losing their liability. So now their assets are falling and their liabilities are rising as you pull the money out of the bank. And then if that gets to a certain point, then they're no longer able to make loans. They can't, the credit rating goes terrible, and then they end up going into bankruptcy. So this is like how I say, is really important to understand how these bonds work, because everything you look at out there ends up falling back on bonds, right? You think about like how we were just doing the video talking about China, and how China has issued out a lot of debt, or not issued out a lot of debt, but has purchased a lot of debt out there from different nations like Malaysia and Pakistan, Sri Lanka, right? And what they have done is they purchased those bonds, and they call them offshore bonds. So when Pakistan sells a bond or Sri Lanka sells a bond, they do it in dollars, not in their sovereign currency. Well, they could do it in their sovereign currency, but they get a better rating if they sell it in US dollars. So here's a nation that doesn't have anything to do with us, doesn't have anything to do with our corporations or banks or government or nothing, and they're selling dollar-denominated bonds, right? And they're selling them to China. And then China purchases these things, and now that's part of their assets. So when Sri Lanka goes to pay back these bonds and they can't do it, the contracts are written, right, that whatever it is they're using for collateral to, for China to buy the bond, becomes the property of China, or they have to refinance or figure it out like another way to reestablish some new debt. So this is how like China is really messing with these things. But China, in with themselves, they kind of screwed themselves with their corporations, right? Now, again, this isn't like, Chinese government causing this. It's just the economic environment that allowed it to happen, more or less. And so when you have like the property developers down in China, largest property developer in the world, Evergrande, when they would pay a lot of their contractors, they would pay them in something called commercial paper, which is, again, kind of like a bond, but it's a little different. So instead of having like coupons at the bottom of it, they just have a face value of $100. But when they pay it out as if it was $98. And if the person who receives the commercial paper, if they hold on to it for a year or whatever it is, or a particular amount of time, then the maturity will then take it up to a face value of $100. So they actually earn a little bit of interest by simply holding on to the commercial paper for a short amount of time before it becomes due, and then Evergrande pays it out. So it's a way that Evergrande can basically offset or push off their timing on how much they pay out, I guess is the easiest way to understand it, by issuing out commercial paper. So it's like a short-term loan for these companies. Well, if you have enough commercial paper sitting on your balance sheet, and then all of a sudden Evergrande goes, starts going belly up, well, your commercial paper isn't worth $100. You're not going to be able to sell it for $100, or if you wait for it to mature, Evergrande may not even be there. So if you try to get out of this particular debt saying, hey, I don't want to hold this thing anymore, and you sell it, you may have to sell it for pennies on the dollar, like literally 25 cents, 30 cents, maybe even 12 cents or less. And this is really where, like, a lot of these other corporations who have held Evergrande paper on their balance sheet then end up going into bankruptcy. And this is how the contagion effect starts to take place. Right? See how important this stuff is to know and understand? All right, let me get some questions going here. What do you got? Good evening. Yeah, the homie is back with another banger. Keep up the good work, bro. Hey, thank you very much. Hi, what's up, Anonymous? Hey, from Antoinette. All right. Hey, Kevin, how you doing, man? Good evening from Florida, Lakeland, Florida. All righty, all-nighter. Good to see you, man. Question, do bonds or stocks go back to ancient Mesopotamia? Yeah, somehow. Mesopotamia. The ancient, how do you mean? Like, I'm not sure I understand the question. All right. Hi from Hollywood. Hey there, Simon. I saw the video short of you teaching your son construction with lumber. Yeah, absolutely. He loves operating that drill. When I was, when Freddie was about, I guess, 3 or 4 years old, I gave him an impact driver, which, if you're not familiar with an impact driver, it's like a drill, but it's just basically meant for screws, for driving screws. So it has like a ratcheting effect to it. But he loved this thing, right? So it was a smaller drill, impact driver, and I give him just like, I don't know, a bunch of screws. I just give him a bag full of 3-inch screws and a 2x4, and he would drill like 50 screws into that 2x4, just drive it straight down. And one time he'd done it so much that, like, when I went to go pick up the 2x4, it took out like a huge chunk of the sod of the lawn. But yeah, he's been practicing with that thing for a long time. All right, thank you for all the continuous information. Appreciate you, brother. Well, thank you very much, Wesley. You're welcome. I appreciate you guys being here. I suspect something like bonds may have gone back to Mesopotamia. Mesopotamia? Is that how I'm supposed to say that? Mesopotamia? Everyone asks, what is a bond and why are bonds? Nobody ever asks, how are bonds? Well, I mean, yeah, that's true. Like, what bond it is that you're going to purchase. So, if you're buying corporate debt, what are you buying? You're buying the bond of a corporation. If you're buying junk bonds, you're buying really bad corporate debt, right? And that's why they call them junk bonds, because that's what they are. The chances of them paying back are really low, right? Or lesser than, say, a government bond, which has a guaranteed return of paying with zero chance of default. We'll find out about that, right? So you think about, like, how are bonds? Well, I guess it would be like what bond it is that you would be talking about at that point. And then again, like, there's all kinds of ways to, like, think about, like, what it is that bonds do to impact different portfolios. Like, I think about, it's not even like bonds. Like, I think about the collateralized debt or collateralized loan obligations. So you have, like, corporations that aren't, or businesses that aren't even good enough to sell junk bonds, but yet what they do is they borrow money from banks, and then these banks, they collateralize those loans. They put them into, they securitize those loans. So here you have a bunch of businesses who really shouldn't be borrowing money in the first place, but they get to borrow money from, some banks, I guess. Those loans get jumbled up like a mortgage-backed security. Then they get hacked up. The businesses that pay first go to the top tranche. Those top tranche investments are like investment grade securities. So, like, pension funds and, insurance companies and places that normally wouldn't be able to buy these things are able to purchase this particular debt because it's been cut up and placed into a higher security rating, even though everything going into it is this complete junk. So this is something else that I kind of think about. It's just like, man, how bad is it out there as far as this kind of exposure to, to like pension funds and insurance companies? I mean, who knows how vast that part goes, and then you think about, like, all the crazy stuff that happened with within the bond market, like the special purpose vehicles, and how the Federal Reserve set up the corporate debt lending facility, saying that they were going to be buying a bunch of corporate debt, right? A bunch of these corporate bonds. but yet they really didn't buy hardly any of it. I mean, they did enough to establish the credible threat, but really it was the market that went out there and started buying up all this corporate debt. The Federal Reserve just sat back and said that they were going to do it, but didn't really do it. You know, it really leads me to believe, like, where is it that the interest rates truly need to be when you have the Federal Reserve saying that they were going to participate in this market, but then didn't really do it, right? So the perception that people had was, is like, I'm going to buy into this corporate debt knowing that I'm going to be able to sell it off to the Federal Reserve. But at some point, you know, the interest rates just get to a point where it's just like, man, this is not healthy, right? I mean, when you start driving up the demand for bonds, the prices start to go up and the yields start to go down. Well, this is way like a corporation really got funded during, you know, the COVID lockdowns and the special purpose vehicle, you know, setup and all this going on. But then you think, like, how much exposure actually took place during that time? Okay? How many people are exposed to this very expensive corporate debt at low yields? You know? All right, everyone. Okay, let's see here. Treasury bonds versus savings bonds. Yeah, so savings bonds, they're a little different. They're usually, I mean, at least from the understanding that I have of them, and I do have a Treasury Direct account. I don't know how many people actually have set up a Treasury Direct account, but really right now with interest rates as high as they are on the yield on a lot of these treasuries, I mean, for something that has a guaranteed return, you know, and a lot of people are shaking their head at that one. I mean, really, a Treasury Direct account is almost a no-brainer to have, especially, you know, when it comes to like the shorter term bonds or the shorter term notes and bills. I mean, these things, like, I mean, you get your money back almost immediately. Like, if you don't even want to wait 10 years or whatever, you can just wait a short amount of time, wait for them to mature, and just keep rolling it over into short term maturities. And, you know, just pull your money out when you feel it's just like, you know, when you feel like that's it, I don't want to wait any, you know, don't want to take any more chances with it. But savings bonds are typically just issued to an individual that you can like sell it, like you can cash it in early essentially, but you can't necessarily sell it off like in the market like you would like a bond. It's issued to an individual, and then I guess one can inherit it. But like, as far as like, it's not the same as like selling it out there on the market, buying and selling. A savings bond is meant to be purchased and then held on to maturity, and then there is at some point you can cash it in. And they've changed a little bit. I have a really old paper one from, I don't know, like early 2000s or something. I think they stopped making them in like, I don't know, 2010, 2015, something like that. I don't know. They quit making them a few years back, like, you know, 10, 15 years ago. But now you have to go through a Treasury Direct. But you used to actually get like a paper bond, and then like at one point it would turn to a maturity, right? So it'd have like a $50 face value to it, and I think you purchased it at like $25 or something. But there was a purchase price to it, and then it eventually matures, and then you take it down to the bank and cash it in for money. So. And those would have been cool to have for like giving gifts to people, like getting savings bonds for kids and stuff, because at least gives them an idea of like what it is to save in something that gains an interest. So you can like look these bonds up on the internet and see what they're worth as far as the interest rate that they were collecting on them. So debt ceiling, nice. Been waiting to hear what you have to say on this, Yui. The debt ceiling, they're going to pass it. Like, I have very little doubt in my mind that they're going to, you know, raise the debt ceiling again. Only because they have never failed. I mean, it's never happened that they have not raised the debt ceiling. Even if they don't, let's say that they don't, and so bonds come due and they don't pay, right? Like, how does this not paying the bonds work? Well, that's going to absolutely destroy confidence, and there's no way that they're going to allow that to happen. I mean, unless they want to lose their job, right? I mean, if they want to lose their job, then I guess they can go in and let it happen. But if they, if the bonds do start to default, what they're going to do is, and what I'm assuming is that the Federal Reserve is going to say, no problem. There are bonds out there that are not defaulting. We'll take the defaulting bonds, and you can take these bonds that we have on our balance sheet that are not defaulting, that are good, and that way all the toxic assets that are out there are now sitting on the Federal Reserve's balance sheet, and there is no toxic bonds in the system, right? So as long as they continue on with that kind of story, excuse me, everything out there in the market would be still like, good bonds that are not failing. They can also say not pay out on particular bonds, like maybe, say the big banks, I don't know, maybe JP Morgan, Goldman Sachs kind of thing. They can delay payment on to those guys and say, hey, like all those bonds that you're carrying, and then swap them out for the ones that are failing out there, so that all the ones that are outside of the balance sheet of the big banks are good, and the bad ones would then be sitting like with the delayed payment on the big bank's balance sheet. Right? I guess that's another way to kind of go about it. And then just say anybody who you don't like, don't pay China, don't pay Russia, or anybody else who has bonds that you just disapprove of. Just don't pay those ones. Right? And so there's ways that they can kind of work around it for a while and still maybe hold on to a lot of confidence. However, if they start doing like not paying particular countries or particular groups, that would destroy confidence, even amongst the people who disapprove of those other groups. Because you can say, man, if you're going to do it to them, you're going to do it to me. Much like what's happening with the sanctions and de-dollarization and stuff like that right now. So, you see these countries out there that are like, oh man, what are you guys doing over there? That doesn't feel very good, in the sense that you might be able to do that to me. So maybe I'll take precautions to avoid that sort of situation. Yeah. All right. Anyone have any insight? Jordan Maxwell also used to call money blood money, but never explains how from what I saw. I mean, well, you think about it, it's just like, okay. So there was a time when, okay, like the Greeks, the Romans, the Genghis Khan, all of them, right? Every great empire that ever has risen has fallen. And the reason why is because it's always about the expansion of your empire, because it's about bringing new money in, because everybody back at home is diving into luxuries, and there is no domestic manufacturing, and everything is foreign imports. And now when it comes to the United States, that situation is quite dire for us. If we do not sell our debt to the world, we have no way of bringing in anything that is produced around the world, because we have nothing to trade them except for our promise to pay. And a military, right? The military. We have a promise to pay in Federal Reserve notes, whatever they're worth, and we have a promise that we will protect the shipping channels no matter what. Now, how well that succeeds, or to what extent we actually are able to do it, that's all to remain to be seen. But even, the great empires out there, once they are no longer able to expand their empires and take from other people, eventually the new money turns off and everybody falls into poverty. And the United States will suffer that same fate. I mean, there's very little doubt in my mind of it. How long they're able to like hold on to the ability to keep money flowing into the system, the new money, that's to be determined. I mean, like, we got central bank digital currencies coming, and UBI, and all kinds of stuff that, like, economists from back in the day never would have thought of. But yet the economic forces will still be at play. The separation between the rich and the poor will just grow ever increasingly more if we allow the new money to continue to pour in. I mean, if you think it's bad now, it will get like really bad. You think homeless in like just the cities, and then moving out to like, the further outreaches, will eventually find themselves in every corner of our society. Even out in the country, there will be homeless people wandering around looking for anything from anybody. It's like already happening. You can see it everywhere. And that's not going to change so long as you got the new money coming in. It's just the way it works. Those economic forces will continue to be at play. You'll have the absolute ultra stupid rich elite, and then you'll have like people who will never have a chance of ever acquiring anything in their life, because if they haven't done it by the time they're 25 or 30 years old, the amount that you have to work in order to acquire just the simplest necessities of life, like to have an apartment or a car or anything like that will be so difficult to do. It would just be impossible. But yet, at that point, it's really not going to matter because everything will be so convenient for everybody that even if you tried a little bit with the UBI and stuff, you'd probably have everything you would ever want except for, family and, possessions or anything like that. But then again, you probably won't even really want it, especially if you grew up in a society that just says, hey, you own nothing and you're happy, then you probably won't complain. You'll just be like, cool, give me my app, give me my conveniences, give me everything I want, and I don't even have to really work that hard for it. But again, like the separation between the rich and the poor would just be incredible. I mean, think about it now. Think how hard it is for like somebody who is homeless right now. Say you've been homeless for 5 years, drunk, hard dealing with it. You weren't raised right. Think about the possibilities of you getting your crap together. It's like so far out there, remote, that it's probably not going to ever happen, right? I mean, you might find somebody in your life who will mentor you enough to maybe give you the ability that you might be able to work at something very simple, I mean, working at like gas station, pumping gas or sweeping floors or doing something. But I mean, I've talked with a lot of homeless people out there, and you get into a particular mindset. There's no way, they're in a constant survival mode. You realize like the mental deterioration of being in a constant survival mode. It is like, I mean, like I think about that poor girl, that I see every once in a while, and she's nice to me, but she yells at everybody, and because she's in a constant fight. And I think about it as just like, man, there ain't no way that person is never going to get a job, never going to get an apartment, never going to do any of that stuff, and there's nobody that can give her enough help to do it. I mean, a lifetime worth of therapy wouldn't fix it. So, this is the state of the world that we're coming to, and it's going to get worse. I mean, you can only see it through history. I mean, anytime a society starts to break down, it's just like, you see like people just treating people terribly, and they dive into extreme luxuries in a rioting sort of fashion. It's just like, it's ugly. I mean, think about some of the stories you hear about, I don't know, just think about some of I remember, Sarah telling me about some of the stories of Sodom and Gomorrah before, everything burned up. And it was kind of not funny, but it was kind of interesting to hear about how it burned up so bad. And I guess they had a building block made out of bitumen, and, so this is like an oil-based product. So as the fire started to kick in, it just burnt up the entire city because the building material was actually a flammable material. It's just crazy to think. But the behavior of the people, that's what it was. Listening to some of the stories about how it's just treating the fellow man incredibly, horribly bad, and just this extreme rioting and diving into luxuries. And I thought, man, I bet you these two cities were on port cities. They had constant stuff rolling in through there because of the new money. And everybody there just acting a fool. And it's just yeah, I can see that. It happens in every society. All right, damn, internet sucks right now. I'll have to watch it later. Oh, that's a bummer, Jaws. We'll see you around, man. How does he know so much but have no money? Who says I have no money, man? That's another thing. Well, I really don't have any money, but I've been broke my whole life, bro. So God, it's getting hot in here. The sun came down, started blasting through the windshield. All right. It's kind of funny, man. I was 40 years old, in debt, had nothing, drunk, broken down car, just a regular old average job. And now here I am. I'm about ready to turn 47 here in a few months, right? 46 years old. So in 6 years, I've managed to get myself out of which at the time, and yeah, I think about it now, it's just it doesn't seem like as much money, but of course things always, it's always about perspective. But, $20,000 in debt when you have no way, no car, no real way of earning any more money, extra money, you're drunk all the time, it's just $20,000 is an insane amount of money. There is it is so far off from thinking, oh man, I'll ever get that paid off. And so that's kind of the feeling you have, man. This is going to be a burden of mine for the rest of my life, So I can imagine what student loan must feel like, because I had a $20,000 credit card debt, right? Now, when I finally decided, it was just like, man, I'm done with this, man. I cannot live my life like this anymore. I decided that, okay, well, just quit drinking and then figure out the next thing, right? So that's what I did. I quit drinking at 40 years old, right? And like, I was like, I didn't know really what to do. So I was just like, well, just pay off debts, right? I listened to these investors all the time. I was listening to constant, like, everybody. It didn't matter who they were. If they were talking about money, I was listening. And I was trying to figure out what to invest in. Like, I need to put my money towards something that's going to pay off this debt, right? Because I need to become some big time investor. And I was listening to a guy said, if you're in debt, then the best investment you can do is to pay off your debt, because you have to gain a return that is far beyond what it is that you have for an interest payment, that it doesn't make any sense to try and get an investment. Because, like, say you're paying 9% on a credit card, you have to get an interest rate that's like, 12, 15% on your investment in order just to get a gain, 7, whatever it is, the 6, 7%, return. That's like insane to do. Just pay off the debt. And so you get immediately not have to make a 9% interest payment is the best thing you can do. So that's what I did. I just started paying off debt. And that took a long time, right? So I started the channel right about that time. Like, shortly after I quit drinking and started paying off this debt, I started the YouTube channel. And the YouTube channel took a while. My whole goal on it was to earn $100, right? That was my whole goal, to earn money on Google. And it took a long time. Like, I mean, building up the channel was slow. I mean, I remember when I got to 100 subscribers, I was like, oh my gosh, there's 100 people who are like subscribed to my channel. My gosh, I can't believe there's 100 people who would want to listen to me. And then one day I put out a video that got like 1,000 views, and I thought, oh man, that's it. I'm going to delete the channel. That is just too much. I can't handle it. This is too much attention, right? But my family just encouraged me. They were like, "No, just stick with it, man. You're doing good." And everybody on the YouTube channel, like all the comments and everything, were just like, "Man, you're doing great. Just keep going with it." So I'm like, "All right." So I just kept going. I finally got to the 1,500 subscribers, and about that time, I was crossing over the threshold for view minutes. So I was able to become a YouTube partner, and so I monetized the channel. And like, at first it would gain, like, literally I'd put out a video and I'd be lucky if it earned $1. Like, I mean, if it earned 50 cents, I'd be like, oh, check that out. It earned 50 cents. This was a good one. And, even still, I was like, cool, $30 a month. That's neat. I mean, maybe I'll get a couple of checks from Google a year. That would be fun. That's kind of cool. And that was the attitude I took towards making money. Now, at some point, it really took off. And I caught like an algorithm or something, and the YouTube channel really started to gain some attention. And it started making a little bit more money. It got to, like, $100 a month, and then $200 and $300 a month. And I'm getting up to like 5,000 subscribers. And I'm like, holy crap, like, this thing is really starting to do something. Like, I actually have a YouTube channel, like a functioning YouTube, like it's working here. And then what happened? George Gammon, right? So I found George Gammon on YouTube, and I gave him a shout out when he had, like, I don't know, maybe 300 subscribers, right? So this was before anybody knew who George was. I was like, he just popped up on my feed, and I thought, man, this guy is good. He had his whiteboard video, and he was like explaining, economics, macroeconomic stuff, and I'm like, man, we got to give this guy a shout out. So I gave George a shout out, and boom, man, the channel really started to gain some attention then. It started gaining momentum. His crew had gotten a hold of me. We upgraded the channel a little bit. Um, he invited me on to do some interviews on his channel. Then the lumber prices took off, and here I had been doing lumber videos every week for like 2 years, so everybody was like trying to figure out what was going on with lumber, and my videos were just like right there, perfect timing for them, and everything just started falling into place. So it was right there after I had met George Gammon that really I started to be able to get some traction on the money. And so I thought, okay, well, let's pay off some debt, right? Let's get out of debt. So I paid off all my debts. I paid off my family's debts, the student loan debts, everything that there was out there. If I could find a debt that had anything even close to me at all, I paid it off, like all of it. And then, I started saving. I saved a lot, and my family, like, I never really got to do anything with them. Like I never really took them out to eat, never really went anywhere. I was broke all the time. And so, I thought, well, we got a little bit of this. Why don't we, go and enjoy it? So we, took a little trips, not anything extravagant, didn't go anywhere like, fancy or nothing like that. We just, drove to some places around, here in Oregon, went up and visited some family and stuff like that. So it wasn't like we spent a lot of the money, but then I had to buy the house, right? So that took an insane amount of money out of me and left me broke about a year and a half ago. And because the amount of money that they made me come up with for the down payment on the house also said that I had to use the tax money that I was going to use to pay for earning money with Google. So I left me broke like 4 months later after being broke from paying the down payment on the house. So here I had to save like crazy for like the first 4 months just to be able to pay my taxes. And then I ended up having to save like a bunch of it too for this year's taxes. So I don't have any money, right? Like I am broke all the time. Like it seems like every 6 months I am broke, right? I don't know, and it's not my fault. It's like taxes or down payment for a house or some kind of hefty medical bill or something is like constantly taking the money from me. But what I do is I take a lot of that money, not a lot of it, but a chunk of that money, and I invest it before anybody else has a chance to take it from me. All right? Pay yourself first, right? At least 10%. Grab 10% of your money and shove it into something that somebody else can't get, like, or at least you're not going to spend it. Throw it into, I don't know what to put it into, stock market, Bitcoin, gold, whatever it is, but do it with 10% of your money every single time you get paid. I mean, don't deviate from that. Okay. Does that explain? I mean, does that explain how? All right. Are bonds part of debt? Yeah, I mean, it is the debt. When you hear like, sovereign debt market, they're talking about the bonds of either our nation or all nations or something like that. Bonds are debt. Yeah, the debt market, the financials, when you hear the financials, they're talking about bonds, all that stuff. And then when you hear about credit default, like how much it costs to insure the debt, that's another thing. Like that's how you really tell how much a bond is worth, by how much it costs to insure it. And that's another thing. That's called the credit default swap, right? So credit default swap. So if it defaults, then the investor who bought the insurance policy, which is the credit default swap, they get made whole again, right? And so like here you have all these bonds out there, and now you have an insurance policy that covers a lot of these bonds. Here's the thing, that insurance market, that credit default swap market, those are the derivatives, right? They call it the derivatives market. They don't know how big that is. That thing could be huge because a lot of it is most of it is all private. Like it's privately done. Like that thing could explode with a serious like impact to people, because you think about it, if you have these credit default swaps sitting on your balance sheet as part of your this insurance policy, and all of a sudden you have these things exploding in price, it's going to really start throwing these companies around in a way that you wouldn't ever possibly believe. Like think about like AIG, right? This is what happened during like the great financial crisis, is that the credit default swaps were sold like 7-1 to the mortgage-backed security that they're recovering. And when those things started going bad, the mortgage-backed securities, that credit default swap market just exploded and was really wreaking havoc throughout the rest of the economy. Something that nobody thought was ever going to happen. And like I said, I mean, that market is huge. Nobody knows how big it is. All right. Just looked it up. Bonds is a debt security, but is that debt? Yeah, it's still debt. It's like, I mean, any promise to pay is a debt, right? All right. So who says he ain't? Okay. Are houses in Portland going to go down anytime soon? I don't know. I mean, they don't. I mean, they are easing up here in Clatsop County, which is just east of Portland, or I'm sorry, just west of Portland. But I don't know. Like, it doesn't seem to me that the market here is like cooling off in a way that I would have anticipated. It seems like this is more of a desired area, and it seems to me that this is going to be a retirement community. as the baby boomers retire, they're going to look for communities to be in, and I believe that this is one of them. Like here, right here in the Pacific Northwest, the hospital district is starting to explode. It's bigger than anything I would have ever anticipated for our area. So it only leads me to believe that they're like, it's in preparation for a booming, retirement community here. How Portland is going to get impacted by that, I don't know. There's a lot of people, a lot of businesses who are leaving Portland due to all the crime and drugs and nastiness and everything that's going on. So I can't imagine Portland holding on to its real estate market when you have such issues taking place up there with the social deterioration that's happening. No matter what they do, that's not going to change unless like you start bringing in like jobs to provide to people, and that's not going to happen. Like you're not going to bring in jobs like that. Like, I mean, what ends up happening is that the people who have moved there have created a situation in which that their preferences have then made it so difficult for the average person to have a job and live there that they just can't do it anymore. So like, you move here from LA, you move here from wherever, and after selling your multi-million-dollar home, you buy a $500,000 home or something in Portland. Now you got $1.5 million to spend, and you want some of those conveniences and pleasures of life that you enjoy back home. You start bringing it to the area, and you start causing the prices of everything to go up because of the luxuries that you enjoy. Well, then that makes it more difficult for the average person to rent an apartment, to have a car, to buy groceries, to do all the things that they need to do in this particular area. And now a regular job doesn't cut it for them. They have to work extra jobs in order to make the payments, or they just give it up, right? And they're like, screw it, this sucks. I'm just going to live on the street or live in my car. And, there's nothing I could do, to change it. So now what, And I understand that people were like, well, if they got a better job, they got an education, and they did all this stuff. Yeah, that's great. There's a working class job that either pays the bill or it doesn't, right? And right now, working class jobs don't pay the bills. It's just as simple as that. And so they have to leave the area, and the only people who get to be there are the ultra rich and the ultra poor. All right, but isn't money you get from a bond you purchase set in no matter what? Yeah, after you purchase the bond, what you like, okay, unless it's some kind of like, unless the bond has some kind of other like variable rate or something to it that's written into it, but like a typical bond, once you purchase it, yeah, that's set. Like that's what you're going to get until the maturity of it. Now, the price that you could sell it for can be different, right? If yields fall, the prices go up, right? And so as the yields are falling, like if the Federal Reserve all of a sudden they're firing back up quantitative easing and they're buying those bonds, well, they're driving the prices up. As they're driving the prices up, they're driving the yields down, right? The yields on those bonds go down. So you can hold on to your bond and still retain the yield that you had purchased it at. But the moment that you go to sell it, all right, you're going to get a profit because the price of it's gone up. But the investor on the other side of it who purchases that bond, they're not going to get the same yield that you got off of the bond because they're buying it at a higher price. So the yield to the bond investor then changes, but the bond itself remains the same. The coupon rate, the face value of it, all that stays the same no matter what, if it's a fixed income investment like that. Excuse me, man, this kombucha's really got the bubbles going. All right, unless it's a zero coupon bond, which is more advanced stuff. Right, and then that's like, these things get quite extreme. Like they don't even have paper bonds anymore, so you don't even do it. It's all done online. And really, people don't even look at it like as far as like buying this 10-year or like that particular one is going to fail or whatever. Like most people don't even look at it like that. It's just digital entries into a computer screen anyway. Okay. It's unfortunate he doesn't put his energy and knowledge in investing. I do. I just don't do a lot of it. And now I also think about it. It was just like, economists are not investors and investors are not economists. They're not the same thing, right? I mean, those are two different things. I mean, they look at a lot of the same data. They talk about a lot of the same things. They, may even cross over paths a lot of times. But really, an economist is different from an investor. They're not the same, right? I mean, you can use your knowledge of the economy to invest, and then you can use your investment knowledge in order to look at the economy. But a lot of times, these are like completely different things that you're looking at. And I mean, most people are trying to guess like what the outcome of something's going to be, where I'm looking at things as what they are. Like, not I'm not trying to think of like, you know, like how a war is going to impact, defense companies or something like that. Like I mean, my mind doesn't go that way. My mind thinks about like, okay, so you have a war impact. Okay, so what is that going to do for distribution networks and how that reroutes and starts to develop new partnerships in order to facilitate the trades that are now going to be around the world, and what kind of currency. That's what my mind spins to. Like, I don't think about like what companies are going to profit from a war. I'd think about how the people are going to react and how the distribution networks are going to work, how farming's going to operate. That's kind of thing that I start looking at. Again, like, even when it comes to the farming, I don't look at like, okay, so if there's going to be like an advancement in farming, like what companies would you invest in? Again, I don't look at it like that. I just think about, okay, well, if there's going to be like this advancement into farming, or like this impact of farming, meaning that the prices are going to go up in a lot of things, then you're going to have like this overinvestment into particular areas of farming, thinking that they're going to take advantage of the shortages that are out there, and then they end up producing over amounts and oversupply the market, and then you start having crashing prices. And that's the kind of thing I think about, like, like what cause and effects come from it. So, an investor can listen to that and go like, oh, okay, I'm going to invest in this. And I could listen to an investor talk about something and go like, oh, hey, the economic impact from something like that. And there's just two complete. But I do invest. I mean, on some stuff. All right, I'm out of here. This is horrible waste of time. See you, man. Hey, you're still here. I suspect you're right. You're still here. All right, man. How so do you work in finance? I trade options, mostly sell premiums. Good for you. Man, how do they manipulate options? Am I saying this right? Mesopotamia. Origin of civilization, possibly money, to later leading to Summer, Babylon, the Fertile Crescent, present day Iraq area. Bond is a paper note representing the debt. I give you $100 today, you give me $105 in a year. Treasury bonds are long-term years, treasury notes are short-term months. Mesopotamia. Tamia, all right. What brand of drill impact driver would you recommend? DeWalt, Ryobi, Milwaukee, Makita, or what? To be honest, right now, I mean, if you're just to ask me from the things that I've seen, I think Milwaukee right now really has done quite a good job with all their cordless stuff. I mean, I sell quite a bit of Milwaukee things, so I mean, and I'm not trying to like, just brag on Milwaukee or try to promote it. I'm not getting paid to say it or anything like that, but that's the tools that I have. It's the tools that I sell quite a bit. And it seems to be what I see a lot of contractors now asking for and carrying. So right now, I guess they kind of have it, but I mean, really, I look at particular tools like, I've always been a fond believer in the Mag 77 skill saw. That worm drive saw is like the workhorse of framers. So the Mag 77 is definitely that one. The Milwaukee Whole Hog and their Sawzalls have always been like by far the best ones out on the market. So like they've always killed it in those two particular ones. Framing nailers, really, I used to like the Hitachi, the NR93A. Like that one was like a really killer framing nailer. But now they've moved over. They've changed their name to this Motiba or something like that. And I don't know if they're still the same gun. Like I don't know if they still operate in the same fashion. But really, those were like the workhorse was like that Hitachi nailer, the Mag 77. Like any job site that you went to, if the framers weren't carrying those two tools, you're like, how good are you really? Like, because you always judge your framers by like, what they have in their bags, what kind of bags they're carrying, their nail bags. If you got, a framer there who's carrying like, it doesn't really necessarily mean anything about the guy as far as his skills. But usually, if somebody is really good at what they do and they've been doing it a long time, they have incredibly good quality stuff because the crap stuff is really hard to use. They fall apart, it doesn't work right, and you just end up having to spend the money again and again and again. So you just buy the highest quality stuff to begin with, and you can recognize carpenters who have been doing it a long time because that's what they have done is they've built up like a set of tools that are like the highest quality ones. So like when you see a framer wearing like Occidental leathers, which is, a really high end, type of nail bags, and they're well used, like, I mean, they're almost falling apart, but like Occidental leathers will, if you can get them to last you a lifetime, really. Um, but if you see them, they're well used, then generally you can say, man, this guy's been doing this a long time. But if they're wearing like a brand new set of bags, they're all shiny, and the tools inside of it are like, cheap tape measures, and, you know, some like overweight hammer. You can always tell, like, a new framer because he's carrying like some like ungodly heavy hammer, 28 ounce, something stupid, 32 ounce. Like I carried a 19-ounce hammer because you fired nail guns. You didn't swing hammers, right? The only time you ever really swung a hammer is when you absolutely had to. So it was no point in swinging heavy hammers, and because you weren't framing with a hammer all day, you're just using nail guns most of the time. Anyhow, thanks for that little journey. That was fun. It all came from a brand of drill. That was cool. All right. Lots of different kinds of bonds. Yeah. Why do utility companies send you a paper bill? There is a coupon attached, like at the water bill. It will say coupon as with a car insurance paper bill that sends you a mailbox. I don't know. Like, because it's a debt that they owe you, or that you owe them. Municipal treasuries, municipal, treasury, corporate, lots of different grades. Tier 1 investment grades, junk, speculative. Yeah, and that's another one. Like, a lot of people, when you hear the municipals, right? That's like another, like, it's the county bonds or city bonds or something like that. Coupon rate is the payment rate. Yeah, it's what the bond is going to pay. So like, again, like if you had a bond with coupons attached to the bottom, you could rip off one of the coupons and go and cash it in. Yeah. What if a town took at all their mailboxes? Would the government exit turn? Huh. All right. Credit Suisse bond holders, no matter what tranche, got nothing, if I remember correctly. Yeah, and bonds do fail. I mean, there is bonds that just don't pay. And like when it comes to a government bond, the United States Treasury bonds, right? Not government bonds, but Treasury bonds from the United States Treasury, they are guaranteed to pay with zero chance of default. I mean, Greenspan said that. It's like zero chance of default on it. But right after he said that, he said, but we cannot promise the purchasing power of that money. So, like, there's zero chance of a bond defaulting if you're going to be buying it. And that's why I don't stress about the debt ceiling. I mean, I know it's like, for a lot of people, especially if you follow politics, that is a scary situation because the politics will scare the hell out of you in order to convince you that they are right or the other person's wrong or whatever it is. But at the end of the day, there's zero chance of default. Right? I mean, you got to remember that. It's just like, when people said to you, are you scared about having your money in the bank? No. I mean, I probably should be scared about having my money in the bank, but I already know from the things that I read about the Federal Reserve that they have the lifeboats to come and rescue everybody, and SVB proved that, right? I mean, it totally proved that the Federal Reserve is going to be there with their lifeboats, and I know that's not a great way to look at it, as far as like you're really depending on a lifeboat. Yeah, I am. I am depending on it because that's what's going to happen is they're going to come in and they're going to rescue these things, just like they did that bank, just like they're going to do when these bonds default. If they do default, they're going to have a plan in place that says, hey, give me those damn bonds. I'm not going to allow toxic, or speaking as the Fed, I'm not going to allow those toxic bonds out there. Here, you can take some good bonds. And that's the way it's going to end up going down. I mean, at least the way I see it, because they're not going to let it default. They're just not going to. And it sucks, because really, if they would allow things to default, then people would actually start behaving properly. But they're not going to do it, because we're not in a situation in which that people behave properly. They have like no consequences for their actions anymore, no matter whether in their financials or whether they're just behaving in society. There's zero consequences for people's actions anymore. And once they start feeling the consequences from it, then they'll start thinking about things in a better fashion instead of just, Alright, and when they can't create inflation to further manipulate markets. Alright, subprime mortgage crisis. I suspect money markets may play a role as well. Not sure if money market is a dark pool. Unsecured loans at banks are skyrocketing. Savings numbers are at lows. Credit card debt is up. Let's see. There was a lot of mortgage fraud in 2008. Could you talk about how fraud in bonds? I mean, I don't know. Like, I don't know, what fraud do you want to know about? I mean, here's something that I thought was interesting. So, a company's going to fail, right? They're gonna default on their bonds, but the credit default swap that is issued, right, to cover that failing bond, then has to pay the investor. What if the issuer of the credit default swap goes to the bond issuer, right, the company that's ready to default, and say, hey, we got some insurance policies on some bonds that you got out there, and it's going to cost us a lot of money if you default. What is it going to take to get you to carry on? Like, how much money can we give you to continue on for a little while until this thing expires and we don't have to pay anymore? Right? I mean, they're a failing company, right? The investor who bought the bond of this failing company bought an insurance policy to cover it. Now, the same insurance policy that he bought to cover this thing is going to the bond issuer and saying, hey, we got this credit default swap that's about ready to expire, and if you were to stay in existence, right, to stay viable for another month or two, then we won't have to pay out. Is that fraud? How about this? Hey, I bought some credit default swaps, and you look like you're a pretty good company that might actually make it, but you're probably not doing too well. How much to pay you just to go ahead and fail early? Like, not pay the bonds off, so these credit default swaps kick in, right? I mean, these are the type of games that are played out there. It's to try and wrap your head around like how big this really is and how impactful. That actually, who was involved in some of this? Steve Mnuchin and what was it, Sears? I think Steve Mnuchin and Sears, like, I think it was something going on years ago that it was something very similar to that was happening. I don't know that story exactly, but if I remember right, it was Steve Mnuchin and I think it was Sears that had something like that going on. All right. I really do wonder about the bond market and the nefarious things. Some folks taking 18 to 15% loans to meet short-term expenses. Terrible state of the economy. What are your thoughts on precious metals? I'm a fond believer in precious metals. Dollar cost averaging into precious metals is, my opinion, by far the smartest thing that you could do as far as a savings goes. It gives you zero risk against the third party. It doesn't matter what happens out there with interest rates and economy and like, none of that stuff matters anymore when you have a silver coin in your hand. And that's really where I feel that buying precious metals is by far like the smartest thing to do with your savings. Now, again, like, a lot of people look at precious metals as a protector from inflation. I'm not going to say that because I've never had it protect me from inflation. I've been buying silver for, I don't know, since 2009, and never once have I ever seen it protect me from inflation. In fact, I believe that I am under my my like I'm underwater on it, so to speak. Like I've paid more for it than what I have in precious metals, but that doesn't matter because the insurance policy has kicked in more than once for me. Now, there was a time in my life when I was like absolutely broke. I mean, if you're here earlier in the video, we were talking about it, but I had no car. And my buddy who was selling a Tahoe, I said, "Hey man," I called him up. I'm like, "Man, my car's broke. I got to get to work. Do you still have that Tahoe for sale?" He said, "Yep." And I said, "Will you trade silver for it?" He says, "Oh, you know it." And I said, "Will you drive it up here?" And he says, "I'll be up there in a few minutes." He brought me up the title, and I handed over 165 ounces of silver. He signed the title, and I was driving again. And I thought, man, I will never be without silver again. That thing was so I was so fortunate to have it because that was the only thing I had. I didn't even have any way of like borrowing money to get a car or anything like that because my credit rating had been shot to hell due to the foreclosure that I had in my house. So yeah, it was just like I will, like I said, it was just like having silver is an insurance policy, and that's really all it is. I mean, to me anyway. A lot of people look at it as like, I'm going to buy it because I'm going to be it's going to be worth $500 an ounce or something. I already played that game. I'm not going into that mindset ever again. It is what it is, and it's an insurance policy. All right. Benefit of Treasury Direct is you don't have to pay state or local taxes on the yield. Only have to pay federal taxes. Yeah, that's true. All right. Birth certificate bond. Yeah. Yeah, there is a bond that's issued in your name for $1 million at your birth, but man, that's a really difficult one to kind of dive into. Um, we should actually get all nighter on to talk about that one. All right. Insurance rates and tax adjustments are surprising new homeowners, and the forced sale may start this summer. Higher utility expenses, more expensive appliances, etc. Um, no, I don't think so. I think really I mean, I don't think people are going to be forced to sell their home because of that. I think people will be forced to sell their home if they lose their job. That's what I think. If they cannot find work, then they'll start to sell their home because they'll be forced to at that point. But a higher payment, they'll cut back on something. They'll find some way to make the payment, and especially if they have a job. If they don't have a job, then they won't be. Then they will sell it. So that's what I'm looking at is unemployment. When unemployment rises, then I will begin to think, okay, now we're going to have issues with the housing market, whether they're not making their payments. And then if they don't make their payments, a lot of them are going to sit in their house thinking that they're going to get bailed out, right? So how long can they sit in their house before they actually start, the foreclosure process or have to leave that house, and then that foreclosed home actually comes up for sale? So it's still, even through the process of like unemployment and then moving into foreclosures, that whole process would take years, not months, and I don't think there's a situation at all that would force people to sell their home other than the belief that they are going to be able to buy another home at a cheaper price. And if they are stuck at an interest rate that is low, or just in fear that rent's going to be more than their payment, which is in a lot of places starting to happen, I just don't see they will do whatever they can to hold on to that house. Okay, what about municipal bonds? Yeah, we talked a little bit about municipal bonds. I mean, again, like, they're not as safe as government bonds are, but a lot of times that the municipal bonds are actually doing pretty well. They did well when the interest rates were dropping, right? A lot of people were buying into those municipal bonds because, again, it was all about like they were turning into speculators. This is the thing about like bond investors as opposed to gold buyers. See, like a bond investor is an actual investor. A gold buyer is a speculator. And it's important to understand the difference inside of that, because if you are an investor, you are buying something that is going to have a return to it. Like you are buying a rental income because you're expecting the rent. You are buying, a bond because you're going to get the yield, the interest rate off of it. When you buy even into a company, like you're buying stock in a company, you're anticipating that company is going to grow, and the investment of buying the stock is going to cost, inside of that company as it grows is going to yield you, a higher return because of the company's growing. But when you buy a chunk of gold and it's just an ounce of gold and it doesn't change and it doesn't have a yield and there's nothing else about it except for the idea that you're going to sell it off in the future for a higher price, that is straight up a speculation, and that is very different from an investor. But when yields fall so low that the return on the bond is like, it doesn't even really make sense anymore. Like here we had, like you had treasuries that were yielding less than 1%. Like, I mean, a 10-year treasury had less than, like, it was like trading at a, 1.2, 1.1 or something like that. I can't remember how low it had gotten when the price of bonds had gone through the roof, right? So, like, you're a bond investor who's buying a 10-year treasury that's yielding 1%. Like, does that make sense at all? Like, why in the world would anybody ever even, like, contemplate that? It was just like, I'm not going to lend you money at a 1% return. That's stupid. But if you think that you can buy that bond and then interest rates go down into the future and you're able to sell that bond off for a profit, you are a speculator no different than gold, because you don't really care about the interest rate. All you care about is the direction that that bond yield is going. Because if it continues to go down, that means the price is going up, and then you as a bond speculator at that point, because you don't really care about the yield, is then anticipating that you're going to sell the thing off at a higher price, much like as if you bought gold. So when yields are really, really low, there's are no bond investors. They are bond speculators. That's what they are. And now what ended up happening is that the bond investors were forced out there onto the risk, right? So they had to go out there further and further to actually get that guarantee, or not the guarantee, but that fixed income, right? They were looking for that, return, that fixed return, and they weren't finding it down in the treasuries, not safe stuff anyway. So they started going out on risk to find it at the corporate level, and they started buying into a lot of corporate debt because of that. And that was one of the problems that the Federal Reserve was talking about, is that the spread between the corporate debt and the safe return of U.S. securities was too low. They want to widen that, right? They wanted that spread to be further apart. And I'm assuming it's because the return on investment when you go into, let's see, because they would rather have people moving into, like, say, moving into the corporations. If the people had invested themselves into the corporation, those corporations can then grow, hiring people, equipment, and moving into the economy and stuff like that. So they really wanted to encourage people to move into that sort of position. Right? Let me see if I'm saying that right. And so when you have the yield of those corporate debt as low as the fixed income, the safe return, then why would you go into the corporate debt when you can just get the safe return of the U.S. Treasuries? So they wanted that wedge to be wider, right? And that's something that they talked about in that John Williams talked about in Monetary Policy for a Low Neutral Interest Rate World. In that speech, he actually mentions that one thing. And so now what we have is they've driven the yields up very high. As the Treasury moves, or not as the Federal Reserve moves back into lower interest rates sometime in the distant future, I'm sure it's not going to happen anytime soon. But when they do and they start dropping rates, it'll widen that wedge between the two. And so you can either go for the safe return of U.S. Treasuries, or you can go out onto the risk and start buying into corporate debt, and then start financing the corporations again. Now, during the pandemic, the market financed the corporations with the special purpose vehicles. When the Federal Reserve said, hey, we're going to buy up all this corporate debt, but then didn't really do it, that drove a bunch of people into the corporate debt, then financing these corporations. I believe that's going to happen again when the Federal Reserve goes to start lowering interest rates, and then the U.S. Treasuries start to fall, and then that fixed income investor is going to start moving into corporate debt because they're going to get a better return out of it. Wow. All right, moving on. All right. The only way to get a paper savings bond now is to use your IRS tax refund. Oh, can you actually get one that way? I didn't know that. All right. What do you think of China giving shark loans to poor countries to own them later? I just did a video about that. I just did that one. The last video I did was just about that very topic. A lot of people don't believe it, and I'm like, did you read the article? I mean, I always post. That's another thing. People are like, dude, you're crazy. You're making this stuff up, and I'm like, I'm not making it up. Like, if I'm saying it is generally because I have an article that's going along with it, so you can just find make your own decisions after you read the article of it. But I don't really make anything up. Usually, it's like I have pulled something from a speech or something like that, and then I'm giving my opinion on it. And you may not like the opinion or agree with the opinion, but the facts are still facts. I mean, they're still in there, and that's what's happening. Much like Russia and India, that whole oil thing that they were doing. Everybody's like, look, they're getting out of the dollar and all that. I'm like, that ain't gonna work. It's not nobody wants rupees. No nation out there is going to care about taking Russia's rupees. And people were like, well, they can just go and just, buy stuff from India. And it was just like, Russia doesn't want anything from India. They want stuff from everywhere else. They don't want Indian stuff. I mean, there's probably some stuff from India they want, but no, they want, they need things from other places around the world. And everybody around the world accepts dollars, but not everybody accepts rupees, except for India. In Russia, when they were accepting it for oil until now. All right. What about just screw it here and move to another country? Well, I can't think of another country that is as easy to make money as you can in this country. Like, I mean, I was talking to a guy who's going off about how the corporations are screwing the man and everything, and I'm like, there has never been a better way or easier way to make money in this nation than there is right now. Most people just don't even attempt to do it. There's so much stuff out there. It's just unreal. Like, I mean, I just think about how easy it is for somebody to do DoorDash. Like, a friend of mine came into town to drop her son off for a lesson and ran a DoorDash, made $10, and it paid for the gas to get there, to get to town. Just simple stuff like that. There is so little ways of making money. And I know a lot of people are like, $10, what's $10? I want $10 million. If you can't make $10 in an hour, then how are you going to make 10 million, right? Go and figure out how to make $10 in an hour, then make $20 in an hour, or make $100 in an hour, and then make $1,000 in an hour. This is how you build it up. But you got to learn how to do at least $10 first, right? Go out there and figure out a way to generate $1 off of the internet. Get the internet to pay you $1 and then duplicate that. I mean, you know how many times you have to duplicate it before you're a millionaire? Not very many times, I think your son is ready for an AR or AK. I tell you, that little kid is so smart. I mean, he just blows me away. And he's starting to get into these little 8, 9-year-old philosophical thoughts, right? He's like the little Freddy the philosopher. He says to me, we're driving down the road, he's kind of staring out the window, right? And he's staring out the passenger window as we're driving. And he says, hey, Dad. And I'm like, yeah, what's up, kid? And he goes, if you were to push the brake and the gas at the same time, would it take a screenshot? Right? He said to me yesterday, he goes, hey, Dad, I was standing in the shower and I thought to myself, I wonder if this is what dishes feel like. It's just these are the little stuff that he comes up with all the time. He said another one today and I can't remember what it was. And I told him he needs to start writing these things down. Alright. Just mint $1 trillion platinum coin, problem solved. Yeah. Right? I mean, that's all you need to do is just print it up and then issue out all the money and debts are resolved and everybody go back to what they were doing. That won't work either. It comes down to this. It comes down to production and savings, right? That's how an economy grows strong, is by producing and savings, right? Beers and saws. Now, when you have an economy that produced and saved all the way up until the point that they no longer produced and saved, but then they just started importing and borrowing, how long can that last? There's nothing you can do to change the fact that you're not producing anything. Like you literally have to go out and start doing something productive. That's not what we do. What we do is try to figure out a way to go deeper into debt and to get people to say, hey, we fixed the problem by printing up or minting this giant platinum coin. Look, all problems are solved, right? Now, produce. I mean, that doesn't it doesn't make any sense. All right. I got Blippy video. Best return on your investment right now is your own education and job skills. Going to be a very competitive employment landscape very soon. I agree with that. And that's where, like, a lot of people are saying, like, man, he's not, you're not an investor or something like that. And I'm like, well, what do I invest in, right? I want to invest in me. I want to invest in the things that I could do to grow like the uneducated economist. Now, what is it going to take for me to find a venue, to get speakers, to do like my own rebel capitalist? Like that's the type of thing that I want to invest in, right? Why do I want to invest in some company, right? I want to invest in the things that I want, like in life, the things that I want to progress at. Why? I mean, that's why I think about investments and I'm like, man, if there is an investment that I want to do, I want to do it in myself and all the things that I have going on. Learn a new skill now. Good afternoon, you salty berserkers. Alright, buy rice. Rice and beans. Okay, the system can go on and on. Invest in soil and green. Alright. Major depopulation inbound. Yeah, but that's due to, again, that's an economic event that's taken place. It's not anything like people will blame the government, they'll blame the environment, they will blame everything under the sun, but they will not understand what the real problem is. And the real problem is that once you have moved into luxuries and raised your standard of living, trying to bring children into a life of that higher standard of living is very difficult because the chances of you being able to, or chances of you being able to provide them or get them to provide a life that's as good as yours without deteriorating your life is very difficult. So most people, once you have a higher standard of living, will have less children. Now, if you have countries with low standard of living, they're living closer to poverty, the chances of them having children that is going to have a lesser standard of living than them is very low because the lesser standard of living would mean death. Right? So the chances of them having a lot of children because those children have a better chance of life than they had are quite prevalent, right? You have all the room in the world to grow because otherwise you have to die. So poverty-stricken nations have lots of children. It's so counterintuitive to what anybody would really like, think, as far as like you think if you have money or you have luxuries and you can afford to have children, buy children. Yeah, it feels like it sometimes because that's the way it ends up. Anyway, and afford to have children. But that's not the case. Most people, once they have risen their standard of living, do not want to deteriorate that standard of living into a lesser, and they will therefore have less children because of it. All right. Words cannot describe how much suffering this land is about to endure. People need to have a chip in the game. It can be small, but as long as you have got it, it's okay. My heart hurts already. What is a day without Simon? Thanks. Well, thanks for being here. We got 186 of you, 148 likes. Thank you guys for being here so much. We've been an hour into it. What I got 36% power on my phone, so we can be out here for a little while longer. You'll have everything and own nothing. And that's really the way it's going to feel. It's going to feel like the future generations, like, after we're gone, are going to feel like they have access. They're going to talk about how awesome the whole world is, right? But they won't have any capabilities of having children. Right? Because there just won't be any concept of it. It would be like the chances of having children would be so hard and difficult to try and raise children that nobody will have any idea of like what that would be like. And they won't even try to do it. But yet they'll talk about how awesome their life is, right? Because they have moved so much into luxuries. Hey, right on. Did I get a super chat down there? Wow, there's a lot of comments. Oh my goodness. Hey, Jaws, right on. When's the next Riverview video? Tell you what, I'll do one this week for you, man. let's kind of work backwards here. And eventually we stop breeding. Debt ceiling talk. Can someone enlighten me on this topic and what are the consequences are with a default? So we kind of covered that a little bit earlier. I mean, the impacts of that is just like basically anybody who is holding debt won't get paid. And then on top of it, if you can't issue out new debt, then some people are not going to get like their social security payments, or military might get cut or something like that. So this is the deterioration. First, government starts to deteriorate, and then the people who lent money to the government deteriorate, right? So those are the two things that start to fall. However, I don't believe that that's going to be the case. So, like, they may end up suspending some payments to people because they just simply don't have the money to do it. The Treasury just doesn't have the tax revenue or the ability to issue out more bonds if the bonds are defaulting. If the debt ceiling is hit, you can't issue out new ones. So you basically just have to rely on tax revenue, and there's not enough tax revenue to pay out all the checks that the Treasury is going to issue. So some people aren't going to get paid out there as far as like coming from the Treasury, the Social Security type payments. And then other people who have bonds that are maturing will default, meaning that the Treasury can't pay those either. Like, it's like, if you can't, I don't have any money, I don't have any money, right? So I can't pay you those. Now, this is really like the question is like, what will that look like? What's going to happen? Now, it's my belief that the Federal Reserve at that point will say, give me the toxic asset, the Treasury, the one that's defaulting. Here's one that's not defaulting. You can take that one instead. And so there is some payments that the Treasury can make, right? So they can pay on some of the bonds, just not all of them. So the ones that are not going to get paid go to the Fed, and then they swap them out for the ones that are going to get paid. And then the Fed will just delay payments, or they delay payments to, say, like the big banks. Like, the big banks hold a bunch of bonds. They can hold the toxic assets and wait for the Treasury to then either get the revenue when they lift the debt ceiling or raise the debt ceiling or get more tax revenue or cut government or whatever. They can delay payment to the big banks, and they can hold the toxic asset. Or say, screw China and all the bonds that those guys hold that are defaulting, or just default on those ones. It's like, hey, we're going to just send the defaulting bonds over to China and everybody else who we don't like, and we'll let those ones default. So there's different ways that they can go about it. That last one, I think, is probably the last thing that they would ever do, because that would start to destroy confidence. If they did it any other way, you could actually retain a lot of the confidence. It'd be like, oh, the Federal Reserve is here to rescue the day, buying the toxic assets yet again, All right. Honestly, the internet has made it easy to make money and entertain people. That's why TV and Hollywood are having a hard time competing. I believe it, I mean, that's like, it's getting to the point where people are starting to recognize people are looking for authentic. I mean, they want authenticity in everything that they have. They want it in their relationships. They want it in their jobs. They want it in the people that are interacting with them. They want it in their entertainment. They want it in everything. They want authenticity, right? And it's because the fakery has been going on too long, and nobody likes it. Nobody appreciates it anymore. I mean, yeah, there's sometimes for joking around. There's sometimes that it's fun to have something made up, right? A lot of times when it comes into like conspiracy theory kind of stuff, I mean, I used to be a huge conspiracy theory nut. I loved some of these like things. I mean, they would scare the hell out of you, but a lot of times it was just like a little bit of information that was just completely blown out of proportion. That's not authentic. That is not authentic living, and trying to follow that sort of narrative on a lot of stuff, again, is just like, it's not healthy for anybody. And that's where I think a lot of people are starting to recognize that they don't want any of that stuff in their life. They don't want to be misguided and, tried to convince that if they think down a certain line, they're thinking incorrectly or something like that. Nobody wants to deal with that. So that's why, like, even me coming out here, I don't, like, if I sound like another economist out there, I wouldn't know it because I'm not following any other economists. And when people are like, dude, this other guy is totally saying exactly opposite of everything you're saying, what do you have to say about that? And I was like, that guy thinks differently than I do. right? That's all it comes down to. I'm not going to change the way I think because that dude over there thinks differently, or he thinks that I'm stupid or something like that. Hey, whatever. I mean, this is how I think, and this is how I'm going to come out at it. I'm not going to, like, dance around questions, or say like, hey, I'm worried about what my audience is going to think if I say something out there. If they agree, they agree. If they don't, they don't. And this is what it's the only thing I got, is to be authentic. Honestly, the internet, oh, we already read that one. Okay. Two things. One, what is $1 million birth certificate bond called? Two, you can buy a bond then sell it at a higher price instead of the yield. You can buy a bond then sell it at a higher price instead of the yield, even with the extra fees for selling early. Well, obviously there's a point there where it doesn't make it I mean, it doesn't make sense to sell it because, there's obviously commissions or whatever that you might go through a brokerage or something. But that's not the point. The point is that the capabilities of it are there, right? And so, what was the question? You can buy a bond, then sell it. Yes, you can buy a bond and then sell it, right? So you buy a bond for $100, and then you can sell it for $110, right? It doesn't change the bond as far as the yield goes, or I mean the coupon, right, which is the payment that it would make. So if the bond had 10 coupons along the bottom, you tore one off, that payment would always be the same no matter who owned the bond, right? But the price that you can pay for that bond itself, that can go up or down. That's why the yield changes, but the coupon rate stays the same. So I don't know. Did we get all that? And what is $1 million birth certificate bond called? Okay, that is diving into something that is completely different, right? That is something that not a lot of people even discuss, and it has a lot to do with the sovereign individual, right? The sovereign person. Now, when we are born, and I'm not going to get too deep into this because really, I'm not one, this is like really speaking out of my wheelhouse, right? I've studied this a lot, and I understand a lot of it, but oops. Okay. Oh, get out of here. Okay. I was looking at that message there. I've studied this some. Well, actually, I studied it quite a bit, but not enough that I could really, like, speak out about it in a way that is like something that I truly understand, right? I mean, I understand it enough to know that it exists, but I don't understand it enough that I can explain it with, like, with a true understanding of how this operates. But each and every single one of us operates as a corporate individual, right? And you can really recognize this when you see that your name is spelled in capital letters on everything that you get from the government, for insurance, for bills, all this other stuff. You are operating in a corporate identity, right? And now, if you understand how that corporate identity works, then you would realize there's the sovereign person and the corporate you. And they tried to put these things together, and then we operate as if it's a single thing, but it's not, right? You can take that corporate person as a separate person, right? And that is separated away from you. You're the natural person, and then you have your corporate identity, which is your name spelled all in capital letters. Your birth certificate is on bond paper that establishes this, right? And now if you can go back and do the research to figure out how all that goes down, then you're going to really blow your mind on how society is really like conducted. You'll realize that a lot of us are operating as slaves, right? And this is really once you recognize it, you can step out of that slavery, right? There's people who do it. I know people who operate through the system without signing their names, without dealing with their corporate identity, as far as like they're not that legal fiction or whatever. They're a natural person. And again, this is like a lot of people, they just get so confused. They're like, dude, you're nuts, man. This is a wild story that you're telling, but it's really true. If you want to see evidence of it in a simple fashion, this is really interesting. Go and find your checkbook, right? If you have a checkbook. I guess most kids don't have checkbooks, but Go and find your parents' checkbook, right? And look where they signed their name, right? When you fill out the check, pay to the order of, you fill out the person's name, whatever you got there, and then where they go to sign your name, right? Take a look at that particular line. And you're going to notice that that line looks different from all the rest of the lines, literally the line that you sign your name on. Take a closer look at that, and you're going to notice that it's not really a line. It's actually dots, right? And then if you look with a magnifying glass, you're going to see, or if you look really close and you see it, it's not actually dots, but words, right? And then if you get a magnifying glass, you're going to notice that those words are microprint that says authorized signature, right? That means you are the person who is authorized to sign for that particular corporate identity, right? And they put it in microprint because it wouldn't make sense otherwise. You'd be like, who's the authorized? It just like, that is you are signing the natural person in response to a corporate identity. And it's proven right there. And you'll see it, like, if your name is spelled all in capital letters, that's your corporate identity. Now, I've known a guy who was fighting that and saying, I'm not that person. I'm not that corporate identity. I'm the natural person of the, whatever family. And I don't, and I don't associate, or I'm not connected to any of that corporate identity. Well, this is when they were coming after him from the IRS. And I would see the letters coming to him, and he would call him up and saying, hey, man, I got my name copyrighted. You used my name yet again, and this is going to turn into checks. If you keep doing this, you cannot use my name. It's copyrighted, and, this is completely illegal. You got to stop doing this. Well, eventually, he got a letter from the IRS. He showed it to me that had his name spelled in lowercase, like, first letter of his first and last name were a capital. The remaining letters were in lowercase, and it basically told him that he was no longer obligated to pay anything to the IRS or whatever. It was just like basically said, hey, just leave us alone for the most part. And I couldn't believe it. At that point, when I saw that official letter coming from the IRS and his big old grin on his face saying, I told you so, I was like, at that point, I was convinced. I'm like, okay, this stuff is real. And that's when I started doing my own research into it. But, yeah, we all operate under a corporate identity, but we don't have to, right? And this is the reason why they force you into like driver's license, why they force you into using insurance and all that other stuff. And because we don't understand our rights and being able to conduct ourselves in a way that says, hey, you can't, infringe on my rights, and I'm not going to agree to any of this process because I'm the highest authority there is out there, because nobody knows how to do that, then all this government intrusion and infringing on rights and all that other stuff, it's because we just simply allow it to happen, is because nobody stands up for it, because nobody knows that they're supposed to or can. I mean, here's the thing. When you get a title for your car, you know what you're getting? You're getting a certificate of title. It's not the title, it's a certificate that says that there's a title out there. See, the real title is actually called something called the manufactured statement of origin, right? And now nobody gets this manufactured statement of origin. That goes to the state. They put it on microfilm, destroy it, and issue out a certificate of title, right? So this is what you get to own, is a certificate of title instead of the actual manufactured statement of origin. Now, if you had the manufactured statement of origin, right, the actual like birth certificate of the car, well, then it's property of yours. See, when you have the certificate of title, part of that title, it now belongs to the state, so the state has vested interest in that car. Now, you get the decisions of it, like whether the car even gets to exist. I mean, you can destroy the car or whatever, but when it's out there off of your property, the state now gets to tell you that you have to have insurance, you have to have like license, you have to have registration, you have to have all this stuff. Now, if you had the manufacturer statement of origin and you had that vehicle, you get pulled over and the police officer says to you, license, registration, proof of insurance, all that other stuff. And you're like, no, this is my vehicle. I have the manufacturer statement of origin. You can't take this from me. And they're like, well, we're going to tow your car. And it would be like, no, this vehicle, as if it's my skin, right? You don't have any vested interest, no certificate of title out there. I got the manufacturer statement of origin. It completely belongs to me. I don't have to have it insured. I don't have to have it registered. And I don't have to have it, you don't get to tow it. Because unless you're judge, juror, and execution, this does not constitute due process. And you can't take my private property from me. That's the difference. And people don't recognize that. They don't know that that even exists out there. That whole concept right there is completely foreign to 99.9% of the people, right? I mean, to even know that that can even be a possibility. Police officers don't even know that stuff. Like lawyers don't even know this stuff. Well, I mean, I imagine some lawyers know it. They probably have a better chance of knowing it than anybody else. But that's where I'm kind of getting at, is that this is the type of behavior that if we were to truly understand our rights and our privileges that we have and what we can do to, to make sure that we retain our rights to travel, our right to speak our mind freely, our right to do the things that we do, and not be harassed by a government intrusion using a corporate identity to just take things from you, right? I mean, that stuff is hard to understand. It's really hard to wrap your head around all that stuff. Did I get another super chat? Or did I miss one? Oh, okay. Weird. Okay. Did I start losing? Nobody's commenting anymore? What happened? Hey, Lord. Okay. The sooner the better. Lord Humongous is up here. Because fiat trash paper going to zero. Did I lose, like, comments or something? I'm not getting any more comments. Are you guys still there? Super chat none. Hide all messages. There we go. Gotcha. Okay, cool. You guys are back. I wonder what happened there. I got all my comments froze up. Okay. Off subject. Do you think Home Depot will close a few stores? Yeah, I think they're probably going to end up closing a few stores, but it's going to be a bad idea because it's going to get followed up right behind it with any kind of the moment. Here's the thing. The moment that the Federal Reserve gives any kind of indication that they are not going to be raising interest rates any further, people are going to take that as good news, even though it would be bad news, because if they're not raising interest rates any further, anyway, no matter. Bad news is good for the economy, good news is bad for it, right? So what's going to end up happening is that as the inflation scenario, right, starts to come down and we have a slowdown in manufacturing of new homes, right? Let me see if I can get this right. And then we have this slowdown of manufacturing of new homes. The Federal Reserve is going to say, okay, we have peaked out on inflation and now we are no longer going to be raising interest rates, right? At that point, people will look at that and say, oh my gosh, that's our moment. Interest rates are now reversing, right? And they're going to start moving back into the idea that the interest rates are going to get lesser into the future. So if you can buy a house now and say readjust your interest rates or readjust your loan or remodify your loan into the future, what was that? I don't know. Like, well, I mean, okay, let me think. So a lot of the homes that are being sold right now, let me see, if I was talking to a mortgage lender, he said that about 80% of the mortgages that he is selling right now have buy downs attached to them. So with this perception that you will be able to renegotiate or, do another loan, like remodify your loan going into the future at a lesser interest rate, if that starts to take place, right, then you're going to start having people moving back into the home building, right? Home Depot, right before that, will have seen a slowdown in home builders, right? A home like we're experiencing right now. As they start to shut that down, the availability of getting material out to these home builders is going to be less because there's going to be less available distributors out there, because Home Depot, if they start shutting stores, that retail places, that smaller stores will be shutting down as well. That's going to limit the amount of distribution that can actually be pushed out there to these home builders. It's actually going to slow the home building down at the same time that the demand is going to be ramping up. So Home Depot is actually going to be screwing themselves right when they do that, right? I mean, it's just like, it'll make sense because they won't have the home builders there, but it's going to be coming right at a time that it's going to be right preliminary to the Federal Reserve adjusting their thought on interest rates as far as not going up any further. Anyway, I got to think about that one a little bit more to explain it better. But anyway, that's kind of the cause and effects I think are going to come from it. All right. All right, Redazon, thank you very much for the $9.99. How's the Sabbath in Astoria, your town? Many countries have a soft law, culture of weekly holiday. What's your thoughts on Sabbath, blue law? Help America in long run. Some countries have Mondays off. I don't know. I work every single day. I work every single day, and I work from the time that I get up till the time I go to bed. There's not a single day that I don't do something for the YouTube channel, or my job, or my side gig, or whatever. I mean, every single day I work, and every single hour of the day I think about work. You know, today I went to Portland to drop my mom off at the airport, right? And there was an anime art show up there. So we went to the anime art show and had lunch and drove back. And it was one of the greatest times that I've had, because it was like the first time in a long time that I went 5 or 6 hours without actually working. I was just hanging out with my family and doing family stuff, and I wasn't working. And that was like, it felt really, really good, because I work all the rest of the time. Right? And that's the kind of attitude and mindset that you really have to have if you want to get anywhere. Like, if you want anything in your life and you don't have it, then you have to work. You have to work damn hard for it. And it's not like the job that you do has to be hard in order to get it, but you have to be in a constant thought of, man, I'm trying to get further and further. And if you're just sitting there not doing anything, or you're taking time off because, hey, this is me time or whatever, that's you not having, that's you missing out on opportunity to further advance yourself. I don't waste that kind of opportunity. Like, I mean, every single day I'm thinking of something else, another video, another opportunity, another connection, something, you know. Social Security is basic income for the old and disabled. Your FICA taxes pay for nothing. They just get removed from the economy. Speaking of bonds, how does it work if you invest in a bond fund ETF? If rates go up, does that mean your portfolio goes down while you are simultaneously getting some returns on the interest? Yes, that's exactly what it means. That's exactly what it means. The ETF is an exchange-traded fund. So instead of buying a bond directly, generally you're buying a fund of like a portfolio of bonds that you get to go, that you participate in. That's, you know, the easiest way to understand that. And so, yeah, those bond investors really know what they're doing. They, you know, maybe adjust that ETF, you know, as far as like what sits on that balance sheet or whatever, or on, you know, so to speak, inside of that ETF fund. And so, yeah, bonds always, like, I mean, unless they default, they're going to pay an interest on it. But what the price of it, like, you know, you might have invested, you know, $100 into it, it's still going to pay you an interest, even though now you might only be able to sell it for, you know, $85 or something like that. But it'll still pay an interest on it because they are an interest-bearing account. So, and then, yeah, with the ETF, it's just like you get to buy into a fund. So it's just like, you know, somebody who you really like, you know, you think is smart and understands the market really well, you can buy into their exchange-traded fund or whatever, and hopefully it'll do well. All right. The internet has only made it easier for certain personalities and minds to make money online. It's not necessarily easy to make money online for most people, nor is it for everyone. I agree. It's not for everyone. And no, it's not easy. You have to work at it. But yes, anybody can do it, right? I mean, anybody can do it. Anybody can do anything they want. That's the whole point about it, right? I mean, anybody can do anything they want. You just have to start doing it. Like, if you want to be a YouTube personality, if you want to be out there doing it, then you have to, guess what? You have to put out videos. You have to put out YouTube videos every single day and be a YouTuber, right? And just start doing it. if you have terrible videos at and you're not trying very hard at it and you're just putting out, lame stuff expecting it to happen, well, then you have to try harder at your YouTube videos. If you want to be a stockbroker, then you have to start dealing in stocks, start like, learning the game. Go to work for, companies that deal in, that are brokerages. You may not know have any clue about what you're doing about any one particular topic, but there is very little doubt in my mind that if you put your mind to anything you want out there, you can get and acquire anything at all. I watched my buddy sit at his kitchen island table with a cell phone and get all kinds of stuff. He was like, he laughed at me, and I was like, man, where did you get this time? He would come across all these crazy deals, and he was just like, dude, you watch me do this every day. You see me sitting here at this island smoking weed every day, scrolling Craigslist, Facebook sites, all the stuff, everything, and he finds these deals and he turns and burns on them, just like flips them for cash, or buys like an old truck or something and fixes it up and cleans it up. And this is his game. This is how he works it. I mean, the opportunity is out there for anybody to do anything. The internet provides you with all the information and all the platforms and everything that you could ever possibly need. Here's the other thing. If you got information and you got attention, you can make money. That's all you need. Information and attention. And I mean, think about it, like schools, church, Hollywood, all this, I mean, all that stuff, information and attention, no matter what you do, you can do it. Like, I mean, it doesn't matter what it is. Fishing, you know, how to garden, how to, I mean, everybody's good at something. Everybody has like an idea in their head of something that, they're interested in. They have a little bit of a passion. Share that passion. Right? You go out there and you just talk about it in an honest fashion. No, passion. Okay. You just talk about it in an honest way, and you share that information. The universe will start providing it for you. They'll be like, oh, hey, you got information. Here's some, and you got attention. Here's some abundance for you. Here you go. But you have to do it. You have to get out there and do it. You have to be out there and part of it. You can't just sit around waiting for stuff to happen. It doesn't work like that. I mean, there's nobody out there in the world that's going to help you. That's going to do it. Like, there's nobody going to show up at the door and say, like, dude, today's your day, man. Let's go. We're going to make you a YouTuber. Right? I mean, that doesn't happen like that. You have to go do it. You just have to do it, So is this what's possible, like seriously possible, with Bitcoin and becoming your own sovereign individual? If I hung out with some with some people who have some money, right, last weekend. And when you hear Mike Maloney talk about his 900 acres that he has and his 2-mile long driveway from where his property starts, from like the gate to get through to get all the way up to his house, when you hear about like the conditions in which that his property is set up to be self-sustaining, you live in a way that nobody else, like, it's just far beyond anything. Like, you don't stress about food, you don't think about medical, you don't think about like government rules and stuff like that. I mean, there's some government rules, but you're not worried about certain things out there. It's like you have completely created your entire own world. Your own food, your own electricity, your own everything. You got your entire everything you need. That mindset is so far different from the individual who's trying to figure out how it is that they're going to be paying rent at the end of the month. These mindsets are so far different. So when it comes to like being a sovereign person, like if you're working a regular job, if there's being a sovereign person is very difficult. You have to know the rules. You have to understand the case laws that have existed out there, because they will just bully you. They'll push you right through all this stuff if you do not know how to defend yourself. right? And like I said, there's nobody else coming to rescue you. So you're on your own when it comes to that. And there's a lot of people who know it. They know the case laws, they know the constitutional rights, they know everything about how it operates and how to work it. And again, like, in order to do something like that, I mean, I don't know too many people who can. Like, it's not like something that I think is going to be happening for people. And Bitcoin or being a sovereign person, like, I don't think that's like a new future concept. I think that most people are probably going to live cluelessly, and that's the way it's going to be forever. This whole like living as a sovereign person, that's only to the privileged that understand their rights and they understand how that operates. All right. Did I have it again? All right. Simon, this book explains everything you were speaking about freely yourself. The UCC connection, how to free yourself from legal tyranny, sounded nuts, so I never read it. Now you left me no choice. Well, I don't know if you go by Jesus or Jesus, but Jesus, thank you for taking the time to read that book. Let us know what you think, right? Let us know what you find from that, because I believe it's real. Like, from the things that I've seen in my life and the little bit that I've gone into when I started diving down into those rabbit holes, and some of the experiences that I have seen in my life, it leads me to believe that that is very much a real concept. But it's like I said, like 99.9% of the people have no clue about that thing, about how that is. All right, poor old Mike Maloney. He has been saying the same silly thing forever. Mike is a pretty cool guy. I got to hang out with him for a couple of hours, and Mike is cool. I got to hang out with him and Robert Kiyosaki and George Gammon and Jason Hartman and Ken McElroy and Chris McIntosh and Simon Black and all these guys. They were all at this cool cocktail party at the very end of the Rebel Capitalist live event, and that was so much fun. George puts on such a good, this food was so good. They had like all kinds of good stuff. They had sashimi and they had barbecued pork and they had like fancy little sandwiches and like all and crab legs and just like everything you could ever possibly imagine kept getting put out there. It was like food after food after food. It was so much of it, and everybody was just like loving it and eating it up. It was a good time. I don't know where I was going with that. Anyway, Mike was there, and Mike is a cool guy. I mean, Mike was really cool. He was very friendly. He was just like, I mean, he never heard of my channel or anything, so I was talking to him about it. He was very interested, in what I had to say. I mean, he was, he listened attentively, he was like, listening, and actually engaging in conversation, which, a lot of people are just like, this kind of small talk, whatever, and they blow it off. But no, he was actually like engaged in the conversation. It was cool. Yeah. All right. Why does it seem humans are not good at converting worn down or unusable mansions on estates into divided plots with homes on them? Because a society like ours, any society, doesn't cater. Like, we went through the working class. We built up a big working class, and then we deteriorated that working class, right? So it was just like, it was like a wave that went through the economy. Like, this working class people had the life, right? It was easy to do. They had poverty, like after the Great Depression, and then we started moving into the, into the Industrial Revolution, and people started getting these really good manufacturing jobs and increasing their standard of living. And so we had this big bulk of like society that was in this working class jobs that would pay well, right? And as those working class jobs started increasing the standard of living, it took ever increasing amounts of money into those working class jobs until eventually you had to have an higher end job in order to have that standard of living, until eventually just a working class job doesn't provide you with the standard of living anymore, and only like higher end jobs will provide you with a decent living. Everybody else has to suffer with apartments, or roommates, or grouping up into like multifamilies into a house and stuff like that, because that working class, that high end or good production jobs that provided a good standard of living have disappeared. Like they've moved out of the nation and over to China or wherever they have gone to. So you just don't have that available to them anymore. In order to have that decent standard of living where you get to live in a house, you have to make a lot of money, right? You got to have two jobs and a DoorDash. You got to work two jobs and a side gig in order to be able to live in a house. Otherwise, you got to leave. You got to go find some other place to live. And that's like Cantillon. Cantillon explains this quite well in his essay. It's, once you understand it, it's not hard to see. Like, a lot of people are like, man, it's not fair. Well, yeah, life isn't fair, and neither is economic forces. They're not fair either. So, like waiting for homes to become available for everybody out there, the only way that can happen is if we all fall into poverty, and then we start building up our middle class again with good production jobs, right? So we all have to fall into poverty, live that way for a while, reestablish a new generation who is, willing to start off, life at that level, right? They're not willing to, they're just forced to, but, having a life that starts off that level, and then you can start increasing your production from there. But right now, the luxuries are just too high. Like, you have to ever increasingly distribute debt to the rest of the world so that you can buy their stuff, because we don't manufacture it here ourselves. It's like you can't fix it. There's no fixing the system. That's why it's like eventually going to fall apart when people stop issuing or stop buying our debt, and then we'll be screwed. Like what do you do at that point? We don't have enough gold. We don't have any manufacturing. So even if you were to just like, hey, let's go back to a gold standard, you would immediately export all your gold for all the imported items that you buy, and we would be really broke after that. We would have absolutely nothing, and then they would stop sending you stuff. If you turn off the U.S. debt, then again, there's nothing to buy the people's stuff, and now you fall into poverty again. So no matter what, poverty is the end, a result of this vast fiat experiment that we are going into. The only thing that we could hope for, as our way of life goes, is to hope that they can expand the debt even more and move into UBI or whatever it is. I'm not saying that's a good thing. Like, not at all. Like, I don't like look forward to that at all. But there's the consequences to it is like basically the whole nation going into poverty. So which one do you want? Do we keep issuing out the debt and try and maintain our way of life, or do we try and fix the problem by everybody falling into poverty and starting off with a new manufacturing base on a gold standard? I mean, I don't think people are prepared to do that. I mean, personally, I just don't think that that's going to go over very well. I'm willing to try it. I'll do it with you guys. I mean, if that's what you want to do, let's go. I mean, but yeah, I don't think the rest of the world is gonna do too well with that. Be careful. Yeah, I don't really. Yeah, I think you're talking about the sovereign person. That's a dangerous thing to kind of get into. The government does not want people talking about that. Because if they did, their whole game would be over. It would be over. All right, I'm back. Okay. Worst time to buy government bonds. They're not watching the market correctly, and market bad investment and contracting economy. Wife, that's the title of the book. Has nothing to do with me. Oh, yeah. Are you talking about that book? Yeah, no. This is like, yeah, it's a book that you should read that book, man, and then let us know what it's about, or let us know what your takeaway is from it. What's the name of the book? Chris McIntosh was probably worth listening to. Yes, he was. It was actually all the speakers did a wonderful job up there, and yes, the only thing that bummed me out about the Chris McIntosh one is that I was in the green room listening, but I had to. I think something went wrong with the sound or whatever, and I had to go into the conference room of it, and because it was kind of an open room, and there was like this buzzing sound in the back. I had a difficult time listening because I also got tinnitus really bad in my ear. So I had a little bit difficult time listening to him because he had, because he has like an accent going too, which isn't bad, but it did make it a little bit harder for me to follow along on because I just couldn't quite hear it clearly. But everybody did a great presentation. All right. Yes, Paul, I was thinking the same thing. Don't like Kiyosaki. When the commercial market crashes, he will as well. My apologies. Okay, Mike is a cool guy. I like him and like reading his material. Pay student loan off or invest. Student loan interest rate is 3.5%. I would get out of debt. Like me personally, I would get out of debt and I wouldn't be waiting for like some kind of student loan forgiveness. And the reason why I wouldn't wait for student loan forgiveness is because it's a complete fallacy. It isn't going to happen. I mean, there might be some people who get it just because they dangle the carrot out there saying, hey, don't everybody freak out about your student loan debt, right? By not going out there and doing it. Like that's what they don't want is for future students to say, oh crap, I'm not taking on that debt. I'm not doing it. They want to make sure that the perception that forgiveness is still out there, but it's not, right? There is no forgiveness. There is no forgiveness coming. They'll give some people like a little bit, just like I said, to establish the carrot. But the reason why they're not going to forgive it is because it is too much of the Fed's or the government's balance sheet. Okay. I don't have the exact numbers here in front of me, but there's something called student loan asset-backed securities, slabs. Literally, slabs is what they're called. These student loan asset-backed securities, when a student loan debt is created, that asset, right, that loan itself, then gets bundled up, much like a mortgage-backed security or the collateralized loan obligations or anything else. They get bundled up with a bunch of other ones called slab, and they put that together. That security is called a slab, right? The student loan asset-backed security. The government buys these things, right? Now, the government has a balance sheet just like anybody else, right? Assets and liabilities. On the asset portion of their balance sheet, the financial portion, so they have all these assets on there, right? Now, again, I don't know exactly how big this is as far as the complete balance sheet goes, but of that balance sheet, there's a financial portion of it, right? So if they took the financial portion of that balance sheet and just looked at that, and this is like all the bonds and loans that, the government is basically owns, right? Of that financial balance sheet, the financial portion of it, better than 50% of that is student loan asset-backed securities, right? Better than 50% of that section. So this is part of their assets that they have on their balance sheet. So assets and liabilities out there. If they were to just disappear, those assets off of the balance sheet, right? Now the credit rating is no good and they have issues that go along with that. Can't happen. It cannot happen, right? That's why when people ask me, oh, they already did. No, it's not going to work. It's not going to happen because of that situation right there. The only way it can, disappear is if they get the liabilities back in order to offset the asset or, to pay for it. So the assets and liabilities that they have out there forces them to not be able to just disappear like the student loan asset-backed securities anyway. And that's, I mean, I would have bet money on it that there's no way that all the student loans are going to get cleared out. It just can't happen, right? In fact, in my opinion, they're going to try and get more of them to put on their balance sheet so they can increase their assets, right? And that's why they won't let it. That's why it's not forgivable. It's not. You can't even go bankrupt on it, and and get out from underneath these debts. It's because it's too much of an asset to the government, and they're not going to give it up. What did government just do to Trump? Don't worry about it. January 6 people, Oath Keepers, Proud Boy, whatever. I don't know. I don't follow politics. Buy a 1-year bond, 5%. For those talking about the book, The UCC Connection, How to Free Yourself from Legal Tyranny, David E. Robbins. Don't ignore the 1,400-pound grizz that will eat you alive as you're screaming. As wife winner chicken dinner. Yeah, in fact, I'm gonna go in and get dinner myself. I got 2 hours into this. 200 of you up in here. That was awesome. I got another super. Oh, there it is. Freedom Works for the $1.99. Thank you so much, man. All right. The smart people making big money, talking and talking to make money, not to tell you the real. The real don't sell well. All right. The U.S. Constitution. Yeah. See, that's what, like, that's another thing. Hardly anybody I know really, like, I have a copy of the Constitution on my desk, right? I'm the only person I know who, like, actually actively looks at the Constitution. I don't look at it every day, but occasionally I'll pick it up and, like, point something out in it. There's a couple of things that's in there that, like, people should really know. Article 1, Section 10, right? No state shall coin anything but gold and silver as a legal payment of debt. All money that we use is unconstitutional. We shouldn't even be using it, right? It's voluntary that it's happening anyway. And stores aren't required to take dollars from you. You know that, right? Like, I seen people come to me and it was like, you have to take this money. I was like, no, I don't. There's no law out there that requires me to accept dollars, right? It's all voluntary. Even look it up. Type it into Google. The Federal Reserve says it straight up. It's like, even though it says this debt or this note is legal tender for all payments, or this note is legal tender for all debts, public and private, right? It's not required, right? It's not a required thing. It's voluntary. And so, and if you look at Article 1, Section 10, it says it right in there, the Constitution, that gold and silver is really the only money that we can be using. Everything else is, like, unconstitutional, and the forefathers were warning us about it, but we just choose not to care, I guess. The Fourth Amendment to the Constitution, if there was anything that I would suggest anybody go, if they wanted to just start today by learning something about the Constitution, go and memorize the Fourth Amendment. Memorize that so that you can spit it out verbatim, right? Let me see if I can do it here. Let's see, the Fourth Amendment to the Constitution. The rights of the people to be secure in their persons, houses, papers, and effects from unreasonable searches and seizures shall not be violated, and no warrant shall issue but upon probable cause supported by oath or affirmation, particularly describing the places to be searched and the persons and things to be seized. Show me the warrant, right? And then if you say that, right, when you're in your house and they're like, open the door, you're like, no, man, Fourth Amendment, dude, show me the warrant. When they show you the warrant, it has to be signed. Like, this was somebody reminded me of this the other day. In fact, it was All-Nighter who reminded me of it over the weekend. It was just like, if you ask to see a warrant, make sure that it's signed. Don't just, like, let them hold it up, because they can write a warrant up, but it needs to be signed by a judge, right? So they can have the warrant, but unless it's signed, it's not valid. And then even at that, if you've gotten to a point in which that they have a warrant for your arrest and you're standing in your house, like, if they really have if they have a warrant for you, they're going to kick the door in. So just, if they don't have a legal right to do it, if they don't have a warrant to do it, then they can't kick your door in. So you just calmly say, okay, if you have a signed warrant, I'm going to sit over here, I'm going to put my hands in the air, and you kick the door in, right? And then arrest me, right? But I'm not opening the door. And then you'll know then if they actually have a true signed warrant or not. You don't have to open the door. They'll do it for you. I mean, and so, right, just like the song says, if you got a warrant, I guess you're going to come in, right? Grateful Dead. And then you shouldn't be doing things that get a warrant after you anyway. I mean, what could you possibly be doing that would have a warrant issued for you? I mean, what could you possibly be doing? But understanding those things, and that's important, because, like, understanding the Constitution, being able to, like I said, to be able to spit out the Fourth Amendment like that, to know what all the rights are, freedom of speech, the right to bear arms, the right not to have to quarter troops lest during a time of war, right? The right to, due process, the right to, the right to, was the rights of the accused in a criminal case, the rights of the accused in a civil case. I mean, cruel and unusual punishments. There is a lot of stuff to understand and know in there. Rights not, like, here's another thing, state and local rights, right? Superseding federal federal law. Like, how is it that they have a federal law against smoking marijuana or about possession or selling of marijuana, but yet states can do it, right? How is that even possible? It's because the states have rights that supersede the federal government, right? And we as individuals have right that holds us above all authority. If you know how to exercise that right, there is no authority above you. You do not have to give into it, right? And if you think of yourself as the highest authority and exercise your rights in a true and constitutional legal manner, then there isn't really anybody who can touch you. You are it. You are the highest authority there is, especially in this country. But nobody knows how to do that, right? 99.9% of the people don't. All right. You win some, you lose some, Mr. Relevant. All right. Bob Weir of the Great Fuel Dead sang, "If you have a warrant, I guess you're gonna come in." Bob Weir. And soon you'll have a warrant out for you for owning things and being happy. Well, actually, I don't really own much. I'm just happy as it is, man. I mean, I got this here S10. I own that. I own the Corolla. I have that. I don't know much. I really don't have that much to own. I got some barbecues. Yeah, I have like 5 barbecues, 5 grills. Because like I love grilling. Like I have all kinds of different grills. I got the little Weber, I got the big Weber, I got propane, I got tailgaters, I got Traeger. Traeger's cool. I got that one for a gift from my parents. I love grilling meat. That's like my other thing. So I got the Toyota, I got the S10, and I got some grills, and so I'm happy. And if they're gonna come and take that from me, it ain't that big of a deal. I can grill meat on anything. I can do it on the ground. Okay. Might and will is authority. Might and yeah. Bro, your phone battery lasting longer than I expected. It is. It's about, I'm at 9% right now, so I don't know how much longer I'm going to go. I'm just going to give it a few more minutes. All right, Power versus Force is a great book. Yeah. Oh, yeah. Does Yui not understand memes? One reason I'm moving from Wisconsin to Upper Michigan. What will you grill when meat is illegal? I am raising chickens right there. I'm going to eat my chickens. I'm going to grill them up. And I got the silkies. I got some silky birds. I don't know if you guys ever seen these things. You should Google it. They are the funniest looking chickens. They look like they have fur instead of feathers. They are the cutest little things. They're small. They're these little bantam size. Now, what's neat about these silkies is that they have all black meat and skin. Like not just like dark meat, like black meat and skin, like black as a shirt. And heritage breeds birds also have like a lot more flavor to them than like your typical chicken that you would buy from the store. A chicken you get from the store is actually a chick. It's not a chicken. A chicken is actually an adult bird. The birds you get from the store are a hybrid bird called a Cornish crossrock, or they have a few different types of them, but the Cornish crossrock is a very common one, and they grow in 2 months. So like 8 weeks from the time they hatch to the time they're a 5-pound, 8-pound bird is how those birds end up growing. Heritage breeds take a lot longer, they're a lot tougher, and they're much more like a natural bird that you would get out of the wild or something like that. So they have like almost like a gamey flavor to them. And then the silkies with that all black meat and black skin is just the oddest looking thing, as far as a meat to eat. Anyway, I'm looking forward to that and sharing that with I'm going to raise them up and see if I can, hatch them out in incubators and stuff like that, because I want to raise a bunch of these things if I can. Anyways, that's what I'm going to eat, and it won't be illegal. Hola, UE. Have you done any traveling internationally? Not since I was a kid. Well, actually, I went to Canada, I guess, as an adult, but I've been to Mexico, I've been to Jamaica, and I've been to Canada. And most of that I did when I was younger, Mexico and Jamaica. Canada, I've been to once. when I was in my 20s. Went up to, was up in Victoria. I was hanging out there. Preach it, brother. Yeah. I also have an S10. Every time I sit in it, I think of making money. Well, every time I sit in this one, I think of how much money I'm saving, right? Bought it for $1,200 over a year ago, and that's kind of like my price, right? $100 a month. If a vehicle lasts $100 a month, then I got a good deal out of it. I paid $1,200 for it, and I've had it for 16 months now. So it's well worth every dime I got, and every time I drive it, it's just that much more savings that I'm putting into investments and my future. All right. Be a good person, yeah? Bird fly by birds? All right. I haven't. Okay, laugh out loud. I'm had silkies. Oh, silkies before. So funny. The Polish ones are similar. They look like an old fancy lady. They do. They have like the Polish birds. They have like what they call is a protuberance, right? So it's like a spot on their head that puts like feathers out. So they get these huge like headdress feathers on, and so like these Polish birds will have like these big giant like head feathers that are like covering their whole face. Like some of the hens will be like these big balls, and all you'll see is just a beak sticking out of like a ball of feathers, and they're a lot of fun. But I found that the Polish roosters are mean. They are the meanest, most aggressive birds that I've ever had, and every one of them would just attack everybody around. So I couldn't really have the Polish roosters, even though they were very cool looking. I own 2 used cars, yeah, vehicles under 2,000, 1,200 pickup, you're winning. Yeah, right? I mean, yeah, $1,200 for the pickup, $500 for the Corolla. I mean, holy moly, talk about like, I mean, I've been driving the Corolla for like 5 years or something. I mean, it's just like, I mean, that car is totally like, I mean, I don't know how much money I've saved by having that car. Rather not have payments. I totally agree. Like I someday dream of driving a nice car. Like I do want the Camaro. Like I want to drive a nice car or a nice, even, a new Silverado or something like that. Like something cool to have around and drive and be comfortable and just like, have all those fancy things going on and enjoy it and just like new car smell, experience, everything. Like I love to have that in my life. But I don't want $1,000 to have to come up with so that I can drive. Like, I don't know how much money I have to come up with. Maybe $200, and I can drive all month, right? I mean, that's gas, like included. Well, maybe not all month, but I mean, $300, right? And I can drive all month, gas, insurance, everything going on. Uh-oh. All right, guys. I think my phone's about ready to die. Let's see. Was there? Oh, I was going to see if I could get one last comment in there, but I can't see him anymore. So, all right, guys. So much fun hanging out with you. I really appreciate the super chats. We had $13.97 in that. We had 192 thumbs up and 198 of you watching right now. Thank you so much for being here. Thank you very much for the support. It's always fun hanging out and talking different macroeconomic stuff and learning more about what it is that we need to do in order to provide the best way of life that we can for ourselves and our family and the decisions that we make. All right, Uneducated Economist, you guys let me know.